Good afternoon, everyone. This is Henry. As we get into tonight's video review, I think there's one distinct spot to focus. And before I get into the chart of the SPX, just a gentle reminder, that each day can change so much, which is to say that if I wake up on Thursday and the markets are wildly different than what I'm seeing here, I may have to reevaluate. But essentially, there are two main decisions to consider. As we came into the day, we are recognizing 53.15 as being this pivotal area of resistance. You did get about 15 points above it, so it didn't work to the tick. But I think in more volatile environments with larger ranges, you have to give a little bit of leeway against these zones. So it's just that little bit of a gap up above yesterday's high. From there, the selling did commence, and then you headed straight down into the put wall at 5,200. So 5,200 is your strike to be watching. And the interesting thing about it is that in time, I think that strike will be broken. But notice the interesting relationship when we take Monday's low and measure that from swing low into that swing high made this morning. You'll notice that the 618 retracement, which any of you following Fibonacci proportion will recognize as being a critical retracement, you'll notice it is right at that strike. So when you have different disciplines of study that all give you the same area of support, that's the spot to focus on. So as we get into Thursday, I'm going to be using that 5,200 and seeing if we are bouncy against it. I'm willing to give it about 10 points, so you get down into 51.90. The idea could still work from there. But again, this is thinking about how, a single day versus the big picture could be very different. So for single day, and as we move into Thursday, this might be your bounce point. That's where I'll get the morning started. Longer term, and if you do take out the 618 retracement, the idea in measuring these levels is that all of this then becomes in play, right? If you break the 618, you effectively have 4 targets to the downside. The first of which will be taking out Monday's swing low, and then 2, 3, and 4. And notice how down into this also, even though I'm viewing an intraday chart, you've got the study here that is showing you the daily 200-day simple moving average. So I just think there are so many ways that we get down into 50-20, probably 5K. That is my bigger picture bearish target. But as we get Thursday started, and knowing that these days can bring 80, 100 point type rallies, I want to be aware of that. But then again, bigger picture out into next week, out into the August expiration, I think a test of 5,000 is due, and that's when I'm going to be looking to trade. So I hope you find the levels helpful. Have a great rest of your evening, and I hope to see you in the chat room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.